Good morning, guys. Welcome to your Tuesday morning market brief. So it all started when the Prime Minister of the UK backed down on those tax cuts. She said, no, we can't afford them. The tax cuts that were going to happen for the rich last week are no longer going to happen. Credit Suisse also came out and they also said, we're okay. So in Europe, the European markets were buoyed by the fact that the pound was rising on that news out of the UK on the tax cuts. Credit Suisse wasn't about to implode. That good sentiment extended across into the US trading session. We had a weaker than expected ISM manufacturing number. And you might say, hey, weaker than expected, why would markets be excited about that? Because inflation is likely going to be coming down if a manufacturing survey index for manufacturers is a little bit softer than expected. So we saw, bottom line, US markets were sharply higher. The S&P up 2.5%. The Nasdaq up 2.2%. The Aussie dollar, it was sharply higher. Risk on sentiment there. The Aussie was up to 65.11. Oil's up about 4% on the news, $83 a barrel. But the good news is the US 10-year Treasury yield that has been climbing up to about 4% is back down to 3.6%. And the further that falls, the better the sentiment will be in financial markets. And did you know October, November, and December are three of the strongest markets for financial markets all around over the last 75 years. September is generally the weakest. S&P was down about 9% in September. I suspect between now and Christmas, we will see that rally that I often talk about in the last quarter of the year as money managers try and get indexes as high as they can. Got to make sure they get those Christmas bonuses. Have a good day wherever you are. See you tomorrow.